Alright, before we begin, let me ask you something. Have you ever looked at the stock market and thought, why does it go up when everything looks bad and crash when everything seems fine? Have you ever watched the news screaming panic, while some people quietly make millions? And have you ever wondered, is it really possible to make money in any market? Bull market, bear market, crash, recession, fear, greed. Because here's the truth no one tells beginners. Most people don't lose money because the market is bad. They lose money because they don't understand the market they're in. And that is exactly what this book is about. Jim Cramer doesn't promise magic stocks. He doesn't promise overnight riches. What he promises is far more powerful, a way of thinking, a way to survive when others panic, a way to spot opportunity when others see disaster, a way to stop gambling and start understanding. This book matters because most investors are taught only one thing: buy good stocks and wait. But what happens when the market doesn't cooperate? What happens when good companies fall? What happens when everything you believed stops working? This book was written for those moments. And here's what makes it different. Jim Cramer doesn't talk like a professor. He talks like someone who has been punched in the face by the market many times and lived to tell the story. He has seen bubbles. He has seen crashes. He has seen fortunes made and destroyed overnight. And instead of pretending the market is predictable, he teaches you how to adapt. Because the market doesn't care about your hopes. It doesn't care about your beliefs. It doesn't care about your logic. It rewards preparation and punishes ignorance. So in this video, we're not just summarizing a book. We are entering the mind of a trader who believes there is always a way to make money, if you understand what kind of market you're in. But here's the warning. This book will challenge you. It will force you to unlearn popular advice. It will make you uncomfortable. And at times, it will feel like Jim Cramer is arguing with you directly. Because he is. This is not a book for people who want easy answers. This is a book for people who want survival skills. So take a breath, clear your assumptions, and listen carefully. Because once you understand this framework, you'll never look at the market the same way again. And now, let's talk about the man behind these ideas. Author background, context, and the core problem. To understand this book, you have to understand Jim Cramer. Because this book is not theory. It is experience turned into instruction. Jim Cramer didn't start as a loud TV personality. Before the sound effects, before the buzzers, before Mad Money, he was a hedge fund manager. And not just any hedge fund manager. He ran a fund called Cramer & Company, and according to his own records, he had only one losing year over more than a decade. Now pause here. In an industry where even legends fail, one losing year is almost unheard of. But how did he do it? Not by predicting the future, not by believing markets are efficient, not by blindly holding great companies. He did it by respecting one brutal truth. Markets change, and if you don't change with them, you die financially. Jim Cramer lived through the crash of 1987, the dot-com bubble, the collapse of tech stocks, market manias and market panics. And what he learned is simple, but painful. Most investors use the same strategy in every market. And that's the core problem this book attacks. People treat the stock market like one single environment. But Jim Cramer says, that's like wearing summer clothes in a snowstorm and winter coats in the desert. Different markets require different behaviors. Let's slow this down. The biggest mistake beginners make is asking, is this a good stock? But professionals ask, what kind of market are we in right now? Because a stock that is brilliant in one market can be deadly in another. This book exists because people kept asking Jim Cramer, how do I make money when the market is down? How do I invest during uncertainty? What should I do when everything feels risky? And his answer was never one stock. It was a system, a way to recognize market conditions, a way to adjust expectations, a way to stop emotional decisions. The core problem, according to Cramer, is this. Most people invest based on hope. Professionals invest based on probability. Hope sounds like, it'll come back. I believe in the company. It can't go lower. Probability sounds like, what's working now? What does this market reward? What does it punish? This book teaches you how to think in probabilities. Not certainties, not predictions, but adaptation. And before we go deeper, you must understand one thing clearly. Jim Cramer is not saying, you should always be trading. He is saying, you should always be aware. Aware of interest rates, economic cycles, sector rotation, market psychology. Because money is not made by being right once. Money is made by not being wrong too long. And this idea becomes the foundation for everything that follows. So now that you understand why this book exists and who wrote it, it's time to enter the heart of the book, the part where Jim Cramer breaks the market into different worlds and teaches you how to survive each one. This is where it gets serious. Jim Cramer starts with a brutal reality check. There is no such thing as the market. There are markets, plural, and each one has its own rules. Most people lose money because they refuse to accept this. They want a single strategy, a single rule, a single belief they can hold forever. But Jim Cramer says, that belief is what destroys portfolios. He explains that markets move through phases, and each phase rewards different behavior. Sometimes the market rewards growth. Sometimes it rewards safety. Sometimes it rewards speed. Sometimes it rewards patience. And the first skill you must develop is recognition. You must learn to ask, what kind of market am I in right now? Because the market does not announce changes politely. It shifts quietly, then punishes anyone who didn't notice. Cramer explains that beginners often stay mentally stuck in the last market. If stocks were going up last year, they expect the same this year. If tech worked before, they keep buying tech. If growth made money, they ignore value. But markets rotate, and this rotation is not random. It follows money flow. Big money moves first. Retail money reacts later, and the late money pays the price. This is why Jim Cramer keeps repeating, you don't fight the market. You listen to it. He compares markets to weather. You don't argue with a storm. You prepare for it. You don't complain about heat. You adapt. And here's where the book becomes deeply practical. Jim Cramer breaks markets into conditions, not predictions. He talks about bull markets, bear markets, sideways markets, volatile markets, panic-driven markets. And instead of saying, this will happen, he asks, if this is happening, how should you behave? This shift alone changes everything. Because now investing becomes responsive, not emotional. And as we move forward, Jim Cramer begins to explain each environment, one by one, with real trades, real mistakes, and real lessons. This is where the real education begins. Now let's talk about the market everyone thinks they understand. The bull market. This is the phase where headlines are optimistic. Stocks are going up. Friends start talking about investing. Social media fills with screenshots of profits. And Jim Cramer says something shocking here. Bull markets are where most beginners form the worst habits. Because when everything goes up, people confuse luck with skill. They buy anything, and it works. They ignore valuation, and it works. They stop doing research, and it still works. And that's dangerous. Cramer explains that bull markets reward growth, stories, and momentum. In a bull market, investors are not asking, is this company perfect? They are asking, can this company grow faster than expectations? This is why technology stocks often dominate bull markets. Not because they're safe, but because they promise future expansion. But here's what Jim Cramer warns very clearly. Bull markets end the moment people believe they can't end. And the biggest mistake people make in a bull market is thinking the rules will last forever. Cramer talks about how, during bull runs, people stop taking profits. They say, why sell? It's still going up. But professional investors think differently. They trim. They rebalance. They protect gains. Because the goal isn't to be right. It's to stay in the game. Jim Cramer emphasizes that in bull markets, you must know why you own a stock. You must know what would make you sell it. You must accept that momentum is temporary. He shares stories of traders who fell in love with stocks. And love, in the market, is fatal. Because when the market turns, and it always does, the stocks with the biggest gains fall the hardest. So Cramer teaches discipline. Not fear. Not greed. Discipline. Enjoy the bull market. Participate in it. But never forget, the market gives generously, then takes back brutally. And this prepares us for the next phase. Because once optimism fades, once growth slows, once fear begins to creep in, we enter a very different world. Bear markets. How professionals survive while others panic. Now the mood changes. Prices start falling. Good news stops working. Bad news feels heavier. And this is where most people do exactly the wrong thing. They sell at the bottom. Jim Cramer explains that bear markets are psychological torture because nothing feels safe. Stocks you trusted collapse. Experts sound confused. Every rally fails. And here's the truth Cramer wants you to understand. Bear markets are not random destruction. They are repricing events. They punish excess. They expose weak business models. They remove speculation. In bear markets, hope dies first, and beginners react emotionally. They say, I'll sell and buy back later. But later never feels safe enough. Professionals behave differently. They ask, which companies can survive? Who has real cash flow? Who has pricing power? Bear markets reward strong balance sheets, essential businesses, companies with real profits. This is where value matters. Cramer explains that in bear markets, boring becomes beautiful. Companies that sell food, energy, healthcare, utilities, things people need regardless of mood. He also emphasizes something critical. Cash is a position. Doing nothing is sometimes the smartest move. Bear markets teach patience. They force humility, and they punish arrogance. Jim Cramer shares stories of traders who tried to fight bear markets. They kept buying dips. They kept averaging down. They kept insisting they were right. And the market kept proving them wrong. Bear markets don't reward bravery. They reward selectivity. And here's the most important lesson. Bear markets create the seeds of the next bull market. The best opportunities are born when fear is highest. But you must survive long enough to see them. Now Jim Cramer moves into a market most people don't talk about. The sideways market. This is where prices move, but go nowhere. Up one month, down the next. No clear trend. And this environment is incredibly frustrating because people feel like they're doing something, but their money isn't growing. Cramer says sideways markets destroy portfolios quietly. No dramatic crashes. No exciting rallies. Just slow erosion. Fees accumulate. Bad timing hurts. Emotions exhaust investors. In these markets, patience becomes more important than prediction. Jim Cramer explains that volatility without direction is dangerous because it tricks people into overtrading. They chase breakouts that fail. They panic on dips that recover. They react instead of plan. Professionals simplify. They reduce exposure. They focus on dividends. They wait for clarity because not every market rewards activity. Some markets reward restraint. And this is a lesson most people never learn. Sometimes the smartest move is to wait. Sector rotation. Why money is always moving somewhere. Now Jim Cramer introduces one of the most powerful ideas in the book. Money never disappears. It only moves. When one sector falls, another rises. When growth slows, value emerges. When rates rise, financials benefit. When inflation hits, commodities respond. The market is not one thing. It is a battlefield of sectors competing for capital. Jim Cramer explains how professionals watch rotation. They don't ask, is the market good or bad? They ask, where is money going now? And beginners miss this completely. They stay loyal to sectors long after money has left. They fall in love with narratives that no longer work. Cramer explains that understanding sector rotation turns chaos into logic, because now declines make sense. They're not personal. They're structural. And once you see this, fear reduces. Because you understand that opportunity still exists. Just somewhere else. Book. Now this is the part of the book where Jim Cramer stops teaching you what markets do and starts teaching you how people sabotage themselves inside those markets. Because by this point, you already know something important. You know that different markets reward different behaviors. You know that bull markets, bear markets, sideways markets, and rotating markets all exist. But knowing this intellectually is not enough. Because the market doesn't test your intelligence. It tests your discipline. Jim Cramer says something very uncomfortable here. Most people don't fail because they don't understand markets. They fail because they can't control themselves inside markets. And this is where the hidden lessons appear. One of the biggest mistakes he talks about is overconfidence after success. You make money in a bull market, and suddenly you think you've figured it all out. You increase position sizes. You stop respecting risk. You believe your judgment is special. Cramer calls this the most dangerous phase of an investor's life. Because success lowers your guard. and the market punishes lowered guards mercilessly. Another mistake is listening to noise instead of signals. News headlines, social media opinions, hot tips, emotional commentary. Cramer explains that most financial news exists to entertain, not to educate. And if you react to every headline, you will trade constantly and lose slowly. Instead, he urges viewers to focus on earnings, cash flow, guidance, market reaction, not opinions, not predictions, reactions, because the market tells you what it believes by how it moves, not by what people say. He also talks about the mistake of anchoring. This is when you get stuck on a price. I'll sell when it gets back to where I bought it. But the market doesn't care where you bought. That price is emotionally important only to you. Professionals don't anchor to the past. They react to the present. And then there's the biggest hidden lesson of all. Time horizon matters more than being right. Jim Cramer explains that beginners mix short-term thinking with long-term holdings. They buy long-term investments, then panic at short-term volatility, or they trade short-term ideas, but refuse to sell when they go wrong. This mismatch destroys logic. You must know why you own something, and how long you intend to own it. Without that clarity, emotions take over. Cramer also emphasizes something people hate to hear. You don't need to be invested all the time. There is no prize for constant action. Sometimes the smartest strategy is holding cash, watching, waiting, because opportunities don't disappear. They rotate. And now Jim Cramer brings everything together. Markets are not enemies. They are environments. And your job is not to fight them, but to match them. Once you stop forcing opinions, once you stop predicting, once you start responding, the market becomes less terrifying. Not easy, but understandable. And now, after all this learning, after all these insights, Jim Cramer shifts tone. Because knowledge alone doesn't change lives. Understanding must turn into behavior. And that's where the final section begins. Let's step back for a moment. Because this book is not really about stocks. It's about decision-making under uncertainty. It's about humility, adaptation, and emotional control. Jim Cramer wants you to understand something deeply. The market will never feel safe. If it feels safe, you're probably late. If it feels terrifying, you're probably close to opportunity. But you can't act on feelings. You must act on understanding. This book teaches you that success is not about brilliance. It's about survival, staying solvent, staying flexible, staying aware. The market doesn't reward ego. It rewards preparation. And the biggest lesson of all is this. You don't need to predict the future to make money in the market. You need to recognize the present, recognize the environment, recognize your behavior, recognize when to act and when to step back. Jim Cramer's final message is almost philosophical. He says, respect the market and it will teach you. Fight the market and it will humble you. Making money in any market is not about courage. It's about clarity. Clarity about risk. Clarity about time. Clarity about purpose. And if you take only one thing from this book, let it be this. The market is not random chaos. It is a system that rewards those who adapt and punishes those who refuse to change. So don't chase every rally. Don't panic in every decline. Don't believe every headline. Learn the environment. Match your strategy. And remember, now, before we truly end this video, I want you to pause for a moment. Not pause the video. Pause mentally. Because information alone does not change behavior. And behavior is what decides whether money grows or disappears. Think about your own experience with money and markets. Think about the times you bought something because everyone else was buying it. Think about the times you sold something because fear felt unbearable. Think about the moments you knew what you should do, but emotions took control. Jim Cramer wrote this book for those moments. Not for perfect conditions, not for calm environments, but for chaos. Because the market will test you again. It will test your patience. It will test your confidence. It will test your discipline. And when that moment comes, the question won't be, do I know enough? The question will be, can I stay rational when others are not? That's the real edge. Not secret information. Not insider tips. Not predictions. Emotional control combined with environmental awareness. Jim Cramer's deepest lesson is subtle, but powerful. He teaches you that losing money is not the enemy. Losing perspective is. If you lose money but learn, you can recover. If you lose discipline, the damage compounds. This is why he repeatedly emphasizes preparation over reaction. Because when fear hits, you won't suddenly become disciplined. You will default to whatever habits you already built. And that's why this book matters so much. It doesn't just teach you what to buy, it teaches you how to think. And thinking correctly under pressure is one of the rarest skills in the world. Now let me say something very important, very clearly. Making money in any market does not mean making money all the time. It means avoiding catastrophic mistakes. It means staying alive financially. It means recognizing when the odds are in your favor and when they are not. Most people blow up not because they were wrong once, but because they refuse to admit they were wrong. Because the market always offers opportunity, but only to those who are still standing. So as you leave this video, don't ask yourself, what stock should I buy tomorrow? Ask yourself, what kind of market am I in? What is this market rewarding? What is it punishing? Those questions alone will put you ahead of most investors. And remember this, the market is not a place to prove intelligence. It is a place to practice humility. The moment you think you've mastered it, it will remind you that you haven't. Respect the market, adapt to the market, and most importantly, protect your capital. Because once you protect your downside, your upside will eventually take care of itself. If this video helped you think more clearly, if it slowed you down instead of hyping you up, if it made you realize that patience is a strategy, then do 3 simple things. First, subscribe to this channel. Because we don't chase trends here, we explain them. Second, like this video, so it reaches people who are confused, emotional, and overwhelmed by the market. And third, comment below and answer honestly. What mistake has the market taught you the hard way? Your experience might help someone else avoid the same pain. Because the real power of knowledge is not just using it for yourself, but sharing it with others. Thank you for staying till the end. Thank you for listening. And remember, there is always a way to make money in the market, but only if you learn to see it clearly.